Welcome back to the channel. Here in this video, we're going to do really two things. We're going to, again, give you a brief rundown of what to expect this upcoming week, and I will share my thoughts and expectations around Tesla stock. Do I think it's going to be a good week? What about the rest of August? What do the seasonals say about August and September that you should know? Beyond that, we're also going to discuss the really big catalyst for this week besides the economic data with Trump and Putin's meeting. And last but not least, I do have about a 4-minute long clip from Tom Lee on Friday on CNBC that I have not shared with you. And if you have not seen it, you definitely should. He says that multiples are going higher, that we are in the process of actually seeing a re-rating for stocks. If you don't know what that means, don't worry. We'll talk about it. Hit that like button, subscribe to the channel if you have not done so already. Check out that link down below in the description of this video for the trading community. Now, that is the best trading community, hands down, in the world. Like, there's nothing that even compares to that because of the strategy we are taking on. We're going out, finding small cap AI stocks that Wall Street has not discovered yet, and investing in those before Wall Street does figure them out, okay? That is where you get those exponential returns, okay? Like the equivalent of buying Bitcoin at $5,000 a coin and holding it until today. Like, those are some of the opportunities that I think we're uncovering, like massive opportunities. So come check it out, link down below in the description of this video. And I just want to say, by the way, I did not put $80,000 into BKKT or whatever that stock is. I don't even know. Is that BOCT? I honestly don't even know what the company is, but I've seen so many comments from, I presume to be bots, in the comment section. I did not do that, okay? If you want to throw tickers out in the comment section, and if you guys guess which one it is, which stock it is, I will be honest about it. But if not, you can either just come join the trading community. But no, I did not put any money into BKKT. I do not own that stock. So if you see any of those comments, they're not real. Okay. With that said, on to tonight's episode. So just a little bit of news to get into here. NVIDIA is the most valuable company in the world, or at least in the US. I believe it's more valuable than Aramco, Saudi Arabia's oil firm. But hey, it doesn't matter. NVIDIA moves markets. Now, NVIDIA claps back against Chinese acquisitions. Its H200 chips pose a security risk. So basically, China says, or some people in China were saying, that these chips could be backdoored, okay? Where, like, if a company or a hacker or a government wanted to, they could just, shut down the chips whenever they want, okay? NVIDIA says that is not true. Cybersecurity is critically important to us, and NVIDIA does not have backdoors in our chips that would give anyone a remote way to access or control them. Now, this is interesting because over this weekend, really over the past 24 hours or so, we have gotten news that China wants export controls on specifically semiconductors to basically go away for a trade deal. Okay, so kind of some weird headlines going on in terms of semiconductors. Now, also in the news today, U.S. Treasury Secretary Besson expects that trade issues to be finalized or finished by October. Okay, so that's great. That aligns with my time frame or timeline perfectly. I think really second half of October through November and December are going to be very strong months for this market, but I think it's also going to extend into 2026, and I wouldn't be surprised if it goes throughout all of 2026. There's not a whole lot to be bearish on right now, and from a logical perspective, from my opinion, and you have a lot of bears out there. I think there's a lot of people that are on the wrong side of this market, that are bearish on this market, that are nervous and concerned. and you're gonna have to see them, kind of go back towards being a bull again. Like, we're nowhere close to being frothy or over exuberant, over excited on this market. We're just not even really close to that at this point. In fact, the AII Investor Sentiment Survey, or AI Investor Sentiment Survey, as I tend to call it, shows bullish investors at 34.9%, bearish investors at 43.2%. Like, the bears outpaced the bulls by almost 10% still, which that's substantial. Now, neutral investors sit at 21.9%, so that's kind of on the low side. And again, we'll see. We have a new one coming out every Thursday, so we'll see if something changes. But this is the highest level of bears you have seen in at least the last month and a half or so. Now, again, just to quickly point out here from Grok 4, it again, is August a good month for the stock market? And it's not. Okay, August and September are not good months historically for the markets. The long-term average monthly return for the S&P is around 0.60%, and the average return in August is negative 0.01%. But even 1980 through 2019, the average return was negative 0.15%. So it's really not a good month. Okay, September gets even worse though. Okay, September has an average return of negative 0.72%. Okay, so almost 1% negative, which is starkly different than even October, which is positive almost 1%, November positive 1.82%, and December positive 1.49%. Okay, so I'm not just on a whim saying I think the second half of October through December are going to be strong. That's normally what happens. Okay, I do think there's, again, a very strong setup for that again this time around, this year, because people are so bearish. I don't think we're going to have inflation by the end of this year. I think the economy is going to be holding up a lot better than most people think. I think we're going to be getting rate cuts, and the big beautiful bill should help, stabilize the economy. Hopefully lower income consumers can start to recover and get back on their, feet a little bit. Okay, that's the thesis. But really, the end of the year tends to be very strong anyways. And I bring this up because anything can happen in August or September. In fact, Tom Lee thinks stocks, there's not much downside at all for markets. I don't really think so either. I've been in the camp of this consolidation was coming, 2 to 3% downside. We got that, and now we're going really straight back up again. But even individuals like Tom Lee don't think that we're going to have significant downside in markets. And if we don't have it in August and September, it just seems unlikely to me that we get the economy to weaken dramatically, or a huge surge in inflation, or trade negotiations go completely sideways or south, right? None of that just seems likely to me. So again, every day we go further along here in August and September, it does start to add to some of the credibility and strength of this market. That included Tesla. Okay, Tesla on Friday had a great day. I mean, it was up 2.3% in regular trading, up 0.14% in after hours. I think tomorrow could actually be a pretty strong day. There's a lot of indications of, surging demand for Tesla's autos. Okay, and Wall Street has been oddly bullish on Tesla since Tesla's earnings. And you're finally at this technical breakout moment where you kind of broke above the trend line, downward trend line on Friday. Couldn't manage to close above it. Did get rejected, came down a little bit. But if we can close above that 333 level, then you open the door for much larger potential upside. And that is something that could start in this upcoming week. And again, just to kind of point out some of the catalysts for this week, on Friday you have retail sales. That's going to be a very big data set. PPI on Thursday, that's not as important because you have CPI on Tuesday. CPI and retail sales are going to be very important this week. You're basically going to get a rundown of what inflation's looking like and potentially how strong the economy is in the same week. Like that's going to create a fair bit of volatility in my view. Now, take a listen to this clip from Tom Lee. It says here, the S&P is in the process of re-rating and multiples will move higher.
Rally having the tank. Is it already in the early stages of rolling over? Let's ask Tom Lee. He is Fund Strats Head of Research, a CNBC contributor, and he, as you see, is at Post 9. What's up with this market? We tired? Have we run out of gas? What's the story?
I think the market's consolidating and maybe trying to get direction from what the market does, because we did gain 28% from the April lows. We got to digest that. Now we're in August, like the dog days of August, where liquidity is lower. And I think that we're still holding our breath because we're in a period where the Fed isn't going to make an interest rate decision until September. So some of the key macro is kind of on hold. So I think markets are wait and see, but I'd say that pullbacks have been shallow.
Is it fair to say there's a more sober view from investors about stocks? I mean, you've been suggesting that this is a hated V-shaped recovery, even as we continue to climb this wall of worry until most recently where we've sort of sputtered in place.
That's right. I mean, it's definitely the most hated. I can attest to it from our conversations with clients. We can see it measured in surveys like AAII, where there's stubborn bearishness net still. And then we did the rounds, Fundstrat did the rounds with a lot of our institutional clients the last 2 weeks. And I think folks are very cautious, which is actually good for stocks. They're cautious because, of course, markets have moved and our clients tend to be valuation sensitive. But I think adding to their frustration is that during that April downturn, many were selling their best names because they were trying to get defensive, and then they haven't fully reloaded yet. So I think that's why there's still room for stocks to go up.
So your clients are valuation sensitive, which makes me almost want to laugh, because is anybody valuation sensitive to what's been going on in the market? We're historically well above the averages on the prices that you're willing to pay for stocks.
Yes. I mean, what we usually tell our clients, but really at the core, any fundamental investor is going to use valuation as really one of their anchors, is that the stock market had 6 stress tests in the last 5 years, from COVID to the bullwhip supply chain, to the fastest inflation cycle in history, to the fastest Fed hikes in history, then to the Trump tariffs, and then, of course, U.S. bombing nuclear facilities of Iran. Those are things that could cause catastrophes for earnings, but instead the S&P earnings have actually grown. So I think we're in the process of re-rating the S&P. So I actually think multiples are continue drifting higher.
Okay, so let's talk about other so-called knocks on the market. Valuation, obviously, one of them. They say there's too much speculation. You look at some of these stocks, meme stocks, low-quality stocks, cult stocks, and other things that have gone up a ton. Now, you're the chairman of BitMine, which is new, right? Your role there is new. And I'm sure there's a lot of great feeling about you and the role and what's taking place there. BitMine's up 65% this week, okay? It's up 1,000% since you became chairman. Respectfully, I mean, come on. What's happening with these stocks? What's happening with some of this fervor that feels like it's in the market?
Well, I think the dearth of IPOs over the last 5 or 6 years has shrunk the number of stocks in the the U.S. stock market. There's not even 5,000 listed stocks anymore. So these names that are IPOing are scarce, and that's why they go up. BitMine is really, in a simple way, you can value it on how much Ethereum it holds. When I joined as chairman, it had $4 of Ethereum held per share. That number is well over $25 today. So the stock isn't even trading at a high multiple of its Ethereum holdings. And it's well north of 25, but we've disclosed 25 previously. So it's actually, in a way, less expensive now than it was a month ago.
So yeah, it's obviously hard to argue against what Tom Lee says for markets, especially as we start to get rate cuts. I'm not sure if he mentioned that or not. As we start to get rate cuts, then you could definitely argue for more multiple expansion, and really valuation is just the total of what the marketplace is willing to pay. The Mona Lisa has basically an unlimited valuation to the right person, whereas another guy would sell it for a Subway sandwich. Okay, it's all value is in the eye of the beholder, and there's definitely seen it. We've in general seen a less sensitive valuation market ever since even I began investing, like 2018, 2017, 2016, late 2016. There was more of a valuation precedence, right? People cared more about valuations then. And I think just one of the side effects of printing or inflating the money supply, 50% in a couple of years is that valuations don't matter as much. And I think especially when you have to do with AI, valuations just really don't start to matter. Okay. And that's what's actually funny about Tesla. Tesla is cheaper now than it was in 2021 when it hit a new all-time high, right? It's for way more developed. Just there's certain differences that have obviously held Tesla down, like higher interest rates, like a weak consumer. And if we can start to get better on both of those fronts into the end of this year, things get pretty exciting. August and September seasonally are rough months. I don't think it's going to be like a super rough period. I'm just not expecting much excitement or upside in markets between now and then. Like, could we go up to 6,500? Sure. Okay. Am I expecting a run to 700 on the SPY in the next 2 months? No. By the end of the year, though, that is still my price target on the S&P is 700. Okay, so I am expecting a very aggressive, again, rally in the last 2.5 months of this year. And if we do get any weakness in August and September, I think, well, that's the opportunity, right? To, you reap what you sow, or you sow what you reap, right? That's what you need to be doing right now is sowing the seeds of prosperity, for the future. And that's what we are doing in the trading community. Come check that link out down below in the description of this video. Have a fantastic rest of your night, and I will see you in the next one.